If you drive for Uber, Lyft, DoorDash, Instacart, or Amazon Flex, you've probably wondered, can I deduct gas too? The short answer is maybe, but not if you're already using the standard mileage method for the same car. Here's the plain English rule. For your car, the IRS gives self-employed workers two methods. Method 1 is the standard mileage method. Method 2 is the actual expense method. You generally pick one, not both, for the same vehicle. Start with standard mileage. For 2026, the rate is 72.5 cents per business mile. So 10,000 qualified business miles could be a $7,250 deduction. But here's the key. That mileage rate isn't just for gas. It's built to cover a lot of your car costs. Gas, oil, maintenance, repairs, insurance, registration, and depreciation. So if you use standard mileage, you generally do not also deduct gas, repairs, insurance, or depreciation separately for that same driving. That's the mistake a lot of new gig workers make. They say, I drove 10,000 business miles, so I'll deduct mileage. And I bought gas, so I'll deduct that too. That's double dipping, and the IRS doesn't allow it for the same miles. Now, method 2, the actual expense method. Here you track the real cost of running your car. Gas, oil, repairs, insurance, registration, lease payments, and depreciation. But there's a catch. If you use your car for business and personal driving, you can only deduct the business use portion. If 70% of your miles were business and 30% personal, generally only that 70% counts. So, which method wins? It depends on your numbers. Standard mileage is usually simpler. Actual expense can beat it if your car costs are high, but it needs better records. And a couple of costs, like business parking and tolls, can be separate either way. So here's the simple rule. If you use standard mileage, don't also deduct gas and actual car expenses for the same miles. If you use actual expenses, track everything and apply only your business use percentage. No matter which method you pick, keep good records. Track your mileage, save your receipts, separate business from personal, and don't wait until tax season to guess. Quick recap. Pick one method, not both, for the same car. And remember, this is the federal rule. Your state may treat it differently. This is general education, not tax advice, so check with a pro about your situation. Subscribe to the Tax Breakdown for tax rules in plain English.